Okay, well, that sounds great. Well, I am very excited to be here. As Alexandra very kindly mentioned, I'm Steve Kraus. I'm with SimilarWeb. I'm the Chief of Insights, and I'll talk a little bit about who we are as we go along. My presentation is anxious to get going here. It's skipping ahead slides on me already. So, but that's okay because I'm anxious too to talk about winning the internet, which is my topic for today. And really, what I want to focus most of my time on is to take a look at some case studies of brands that are really doing well on the internet and understand how are they doing that. So I'm first going to talk just a little bit about the importance of the digital revolution and what we mean by market intelligence, and then I'm going to focus, like I said, mostly on keys to winning the internet. And we'll look at a number of thriving brands and three of the broad things that they do very well. Dancing with the Giants, they've stopped flying blind, and they connect with millennials. And then I'll just talk a little bit about what we've learned and what data have shown about how top flight organizations can make better decisions with data. And my starting point is this, to borrow a line from Winston Churchill. I believe that when it comes to the digital revolution, we are closer to the end of the beginning than to the beginning of the end. And I believe this is true for consumer behavior and for business strategy. And really, what I mean by this is when I go out and I speak and I talk about the importance of having digital market intelligence and understanding everything it is that people are doing on their devices, the impression that a lot of people have is, well, because technology's been around so long, that everything related to technology is probably a mature category by now. And we really don't see that. There's still tremendous room for growth in all things digital. First, in terms of consumer behavior, I've just got some broad statistics there we've pulled from various sources. That it was just in this year that more than half of the people in the world got access to the internet. There's still double digit growth there. The mobile revolution has been around for a while. It was just in this year we reached the point where half of internet traffic is mobile. And it was just in this year that devices outnumbered people in the world, and devices are growing 5 times faster. So whether you look globally, you see tremendous room for growth, or even if you look here in the US, which is, again, a place where you might think, oh, technology's been around for a while. Everything related to technology is probably, a pretty mature category. And we don't see that. Every year, people spend more and more time with digital devices, now over 5.5 hours every day in front of screens. E-commerce, another thing. Oh, all the growth has already been had there. In fact, continues to grow at 15% year on year and is having huge reverberations throughout the retail marketplace. And digital ad spending is another area where it was just in this year that digital ad spending surpassed television advertising spending and is now a third of all advertising spending. So I do think we're just at the start in terms of what we think of as digitally infused lifestyles, but we're also just at the start in terms of how businesses use this kind of information. A global study of senior executives by PricewaterhouseCoopers found that nearly 2/3 of them say they still use experience and advice more than data to make decisions, even though that same study found that those organizations that shifted to a more data-driven decision-making approach were 3 times more likely to report significant improvement in their decision-making. So in terms of making data-driven decisions, of using market intelligence to inform every aspect of business strategy and tactics, we're really at the beginning. And that's where we come in. That's really our aspiration at SimilarWeb. And before I present to you some data about what it is that thriving brands do differently in the digital space, let me just talk a little bit about our data and where it comes from. At SimilarWeb, we aspire to be the industry standard in market intelligence. And for us, that really means comprehensiveness in painting a picture of the digital world. So it's our aspiration to track every website, every app in every country across every device. And I know that's a huge ambition, but that's what we aspire to do, to paint a complete portrait of everything going on in the digital space. And for a given website, not just how much traffic does it get, but where does that traffic come from? Where does that traffic go to? How many people leave a given site and then go buy the same thing on Amazon? So that's kind of the depth of the information that we are aspiring to get. Where does our data come from? Well, from four different sources. First, we have a global panel of over 400 million devices, of which we are able to, in an anonymized and aggregated way, understand what happens on those devices. We add to that data that we buy from internet service providers around the world, as well as information we get from public data sources. We crawl the internet just as a search engine would. And finally, there are literally a couple of 100,000 websites that share their data with us that allow us to calibrate our models to what we know to be true from directly measured data around given websites or the rankings in app stores and so on. And then we combine all of this data, we're a relatively small company with about 400 people around the world, including a couple of hundred in our Tel Aviv headquarters, who have tremendous expertise in data science and machine learning and artificial intelligence. And they take all of this data and put it into a number of formats that our clients can access it, whether it's what we call our Pro, which is a SaaS platform where you can get in and analyze data. We also have something we call our Fro, a free version. If you go to similarweb.com, you can sign up for a free account and get some data there. As well as for larger companies, we also directly import our data into their business intelligence systems through an API. So that's very quickly where we get our data from. It's synthesized from a variety of sources, and we use best-in-class modeling techniques to give us a full understanding of what's going on in the digital world. So, having said that, who's winning the internet, and what are the kinds of companies and brands that are doing well, and how are they making better data-driven decisions? Well, the first thing I would say when we start to talk about who's winning the internet, it's the big Goliath brands that tend to dominate different categories. So here on this slide, we've just taken the top 100 sites from the United States, and you see a classic long-tail distribution. You see this exact same distribution across all different countries and all different categories. Very, very common that you've got one big player, and then number two is significantly behind number one, and then after about the top five or so, you really hit the long tail. And I think what's particularly interesting here, when you look at the top 100 sites in the U.S., you've got, again, a big five, classic in a long tail distribution. And if you look at those brands, it really stands out that 4 out of those 5 are tremendously successful, and Yahoo has obviously struggled. And I think that also speaks to this notion of it's category dominators that are really thriving, because Yahoo was really not able to dominate in anything. They were good in a number of areas, but they weren't able to dominate search or dominate email or dominate any of the other initiatives that they set out to conquer. And in the economics of the internet, it's really hard to be number 2 in a category and really thrive. And so you do see these category dominators. You've got obviously Google in search, Facebook in social, Amazon in e-commerce, Expedia in travel. The list goes on and on. So that's kind of the first group of companies that are really thriving. Procter & Gamble long ago said that in any category they wanted to be number 1, number 2, or not play. And I think in today's digital world, you've either got to be number 1 and really dominate with a mass market strategy, or recognize that you're not one of those dominating giants. And then you've got to find a way to work with those giants, because those giants, we find across categories, are extending their leads. When we looked at the data back in February of 2016, and we looked at the distribution of traffic to different sites, we looked across 25 different categories, and on average across those categories, the number 1 player was 114% ahead of the number 2 player. When we did this analysis just a month or two ago, we found that had risen to now, on average, the number 1 player is 156% ahead of the number 2 player. So the category giants are pulling away. What does that mean for the 99% of brands that are not category giants? Well, they've got to learn how to dance with those giants effectively. So if you're a consumer brand, and here on this slide, we've just given the example of Bose. Well, you've got to know, obviously, how many people are coming to your site, Bose.com, how many people are shopping for given products. But then, importantly, you've got to know what percent of people then leave your site and go to Amazon. And what we found was that on a given day, 10% of consumers shopping on Bose.com then went to Amazon within a 24-hour period to also shop for Bose products. And of those who went to Bose sites and purchased, they were 6 times more likely to purchase on Amazon. And that's a killer for brands. Brands obviously want to sell as much directly as they can. It's going to maximize their profits. It's going to maximize the strength of their relationship with the consumers. So, just to give you another example, earlier this year, Nike made a lot of headlines when they said, well, we're going to start selling directly on Amazon, which they had not been before. And the first point that brings up is that as a brand like that, you really can't just decide to not have a presence on Amazon. To say, oh, you're not going to sell directly on Amazon just means that you are abdicating your entire brand experience to resellers on Amazon who may or may not ship counterfeit products, may or may not provide good customer service if there's a problem. So the other really interesting thing about Nike coming in and saying, oh, we're going to start selling directly on Amazon was that that decision came out of an initiative to sell more directly to consumers. And at that point, the devil really gets to be very much in the details. And you've got to have this kind of detailed market intelligence to understand, well, what products should I be offering at what prices on what platform? So in the case of Nike, there was the strategic decision to, on their website, have their high margin flagship products that their fans are going to go find and seek out there, but to have a different set of products at different prices for a more mass market consumer. It may not be as much of a hardcore enthusiast who is shopping on Amazon. So there's got to be this understanding of how do we dance with the giants. You can't just walk away from the giants. You've got to be able to dance with them effectively. And everything I just said in this particular example about Bose and Amazon or Nike and Amazon, you can say the exact same thing with a hotel brand or an airline brand and how they relate to the big online travel agents such as Expedia. Those hotel and airline brands want to sell directly as much as they can, but they can't ignore the amount of traffic and the amount of bookings that they get through the online travel agents. So again, it's very much the same kind of devil in the detail. They need to do a lot of research and analysis to figure out what products at what prices on what platform. And when we think about this whole idea of dancing with the giants, just to give you an example of a brand that's doing it particularly well, one is Ralph Lauren. And what we're able to do in SimilarWeb is take a look at what are the different search terms that people might use, and when people use those terms on a search engine, where do they end up on the internet? And you see that Ralph Lauren does very, very well around keywords that are specifically searching for them, that they're basically getting 100% of the traffic for when people are searching for Ralph Lauren or Polo Ralph Lauren. But as you look down at the bottom half of the screen, you start to see that as the search terms broaden out, Amazon gets more and more of the share. So this can give a brand like Ralph Lauren very, very specific tactical advice on how to tweak their SEO to perform better on those keywords for which they're not dominating the traffic. So that's the first thing brands need to do well. They need to dance with the giants effectively. The next thing is to stop flying blind. And I mean this in a number of respects because I go around, I do a lot of presentations, and people will come up to me very excited and say, oh, our traffic is up X% and our conversion rate is Y%. And I say, well, that's great to know. What's your competition doing? And then they kind of give me sheepish grins and they don't really know, because that kind of competitive intelligence, competitive benchmarking, and so on can be so difficult to get that a lot of companies become very focused on their own data, their own business intelligence, without a full comprehensive view of the marketplace, what we call market intelligence. And I can give you any number of examples of this, but it starts out, when you think about stop flying blind, is just really have good competitive intelligence and good competitive benchmarking. Because if you take a look at app installs, for example, as we're doing on this slide, in your Grubhub, you think, well, over the past 2 years, we've, about been breaking even on our installs. It's not great, but it's not terrible, until you put that in a competitive context. And you see, well, in fact, Uber Eats has taken over the category lead, and there are other brands who are starting to make inroads. So particularly in categories that are growing, it's really important to have this kind of competitive benchmarking, because it's easy to be treading water or growing a little bit and not realizing just how much the competition is growing. And when we start to talk about stop flying blind, we don't just mean understanding the amount of traffic that other sites get for that sort of competitive benchmarking, but you've got to understand where conversion happens, where people are buying. So here's just an example where we were looking at hotels.com versus booking.com. And if you're just looking at traffic, you would conclude that for this period of time, well, in fact, hotels.com is doing better. They're getting more traffic. But in fact, Booking.com, which is a really interesting case study in a brand that's sort of been able to buy its growth, but also maintain high conversion rates. You see there exactly what happens with Booking.com having a higher conversion rate overall, and getting more bookings at the end of the day because of that higher conversion rate. So when we think about stop flying blind, you've got to understand the full click stream of where people are going and where people are buying, and just traffic-based information isn't enough. But stop flying blind means more than just competitive benchmarking and competitive intelligence. And for this particular example, what I wanted to do was think about all the different corners of the internet where there's behavior going on that's very important that you may not be able to get access to. And Amazon is a classic example because obviously people are buying a lot on Amazon, but now there's also a tremendous amount of search activity on Amazon. This has really been what we think of as a paradigm shift in the search for and discovery of new products, where so much of that search activity used to happen on traditional search engines. Now, many people are shifting to on-site search. You're an Amazon Prime customer, you go to buy something, you go to Amazon first, and then you start shopping. But if you don't have good information about the keywords that are being used, the amount of volume that Amazon is getting around different keywords, you're really missing a huge chunk of the search pie. So just to pick a sort of a silly example, for this particular quarter, we were looking at data. We found that there were 859,000 searches in a given quarter on Amazon for toilet paper. And then if you look at how much traditional search engine activity for toilet paper led to Amazon, it's much, much lower. So there's basically, in this particular example, 60 times more on-site search than off-site search. So that's become critically important. And historically, you couldn't get search and conversion data from Amazon. Now, depending on your relationship with Amazon, you can maybe get some data. People would argue that it's expensive and it's incomplete, but it's incredibly crucial to have this kind of on-site information. So that's the second broad takeaway we see from successful brands. They stop flying blind, both in terms of good competitive benchmarking data, and they're able to look into those hidden corners of the internet. Finally, I wanted to talk about some brands that are thriving as they're connecting with millennials. And when you say millennials, a lot of images come to people's minds. We're generally talking about people born between 1980 and 2000, so that makes them roughly 18 to 35, maybe as old as 37, depending on your definition. And people have images in their head of what a millennial is. And my point is that a lot of those images and stereotypes of millennials are becoming increasingly outdated. If you think about the age group of 18 to 35 or so, well, that's tremendously diverse in terms of life stage. 18 to 24 is very different from, say, 30 to 35. And if you look at the distribution of millennials by age, as we've done here on this slide, you see that the crest of the millennial wave is at ages 25 and 26. And that crest is about to crash down over some really big life stage changes. This is data from the US. In the US, women now on average get married a little bit before 28, men on average a little bit before age 30. The median age of a first-time home buyer in the US is about 32. So this huge wave of millennials is about to move into this new life stage, but they're going to move into that life stage and approach it in characteristic millennial ways. And so I'm not going to spend a whole lot of time talking about some of the characteristics about millennials because I'm sure you've all heard those. But certainly millennials grew up in a world where there was a tremendous amount of diversity, and that has shaped their attitudes in terms of tolerance and acceptance of multiculturalism, and in terms of the marketplace and interest in more global international experiences. Millennials are the most highly educated generation that we've had in the United States, and a lot of that growth in education has actually been driven by women. In the United States now, a majority of college graduates are women. 70% of valedictorians are women. So, and there have been a number of other marketplace changes you see among millennials based on their background and experiences, a strong sense of value orientation and interest in experiences over things, kind of a real appreciation for feeling smart in the marketplace, doing research, looking at consumer reviews. And of course, obviously, it's a very technologically savvy generation. So I won't go through everything there. But my point is, as we think about millennials, who have these characteristic ways of approaching a marketplace, they're now moving into new marketplaces, and that is presenting opportunities. So, automotive is a category where we've seen growth in consumers wanting to do automotive research as well as buy autos. And if you look at who's doing well in that automotive information space, you see a lot of growth there by cargurus.com. And actually, they just went public just a few weeks ago and have doubled their initial IPO price. And they've been able to grow at the expense of some more traditional, but perhaps better known brands in the category by really connecting with millennials well. Everybody says they're optimized for millennials. Well, CarGurus is, I call them mobile maximized instead of mobile optimized. They do very, very well in mobile searches. And in terms of the language they use straightforward language that's likely to be appealing to millennials who are sort of off-put by fancy, highfalutin, inauthentic language. So CarGurus is really well optimized for things like deal or used or for sale or cheap, bottom of the funnel keywords with plain language that would likely appeal to millennials. And in fact, I could go through a whole host of home and family related categories, and we could talk about brands that are really thriving because they've been able to capture some of that millennial appeal as millennials move into this new life stage. And so I won't go through all of these, but I'll just pick one. And that's Chewy.com, which has grown very interestingly, largely through paid search and pay-per-click. And again, a lot of people have historically said, that kind of traffic doesn't convert. Not necessarily true. But Chewy.com has really kind of gone into a new category of pet supplies and pet food that historically didn't have a whole lot of online activity. And Chewy has really done well and has really grown and has surpassed some of the more traditional players in the field by capitalizing on the fact that millennials are moving into this new life stage where they're more likely to buy pets and have pets, but they also really connect with millennials with the kinds of things that you would expect from an online shopping provider these days, the free shipping, the excellent customer service. A lot of the content at Chewy is just YouTube videos that employees have put up that comes across as very engaging and authentic and sort of low tech in kind of a charming way. So I wanted to finish up with a couple of thoughts about really how to make market intelligence work in an organization. What's the structure for making better data-driven decisions? Because as I talked about these brands that have done well and the ways that they do it, they stop flying blind, they dance with the giants well, they really understand where the opportunities are with millennials as they move into a new life stage. We find that successful companies have some characteristic patterns of working with data. And the first thing that they do is they make sure the data are spread throughout the entire organization. Obviously, our data can be used a lot for very tactical things, such as search engine optimization. But it is also used at the very highest levels in an organization as company executives are really thinking about, well, where are we going to allocate our resources? Another growing use case of our data is among venture capital firms who are trying to decide, well, where are the growing markets? What brands are growing most organically and authentically in those markets? And so where should they allocate their investment dollars? When you've got market intelligence, again, which, we mean to be that complete digital understanding of everything going on in the marketplace, you've got to get the whole company aligned around it. And once you do, you start to see those companies perform better than those that don't. So I just wanted to finish up with a few results from a McKinsey study where they looked at senior executives around the world, and they were able to then group companies into high performing ones, particularly in data analytics, and the lower performing ones. And if you look at what are the success factors among those high-performing companies? You see two things. One, getting senior management involved, and two, they've got the architecture or the infrastructure to make sure that data is disseminated throughout the organization. If you look at the low performing companies and you ask them about challenges, again, it's the same kinds of things. They don't have an organizational structure or a data architecture to make data available throughout the organization. They're not able to secure internal champions. And that same study found it in more quantitative ways, the exact same kind of takeaway, that the companies that are really thriving in the space not only have senior management insights and buy-in, but they've been able to make the data accessible throughout the organization. They're able to provide self-service analytics capabilities throughout the organization. And this is what really separates the high-performing companies from the low performing.